ladies and gentlemen. Good evening. This is Christopher Aaron. It is the last day of November 2016. And in the continuing aftermath of the Trump victory, we're seeing action in the precious metals, which is contrary to many of the fundamental principles that we all know to be true. But the point of this channel is to try to look at what is actually happening, including attempts at manipulating the price, because if we do not pay attention to those attempts, then they can blindside us. So why not see where everyone is showing up in the market, including all the attempts to manipulate the price? We will focus more on the precious metals today. A couple of weeks ago, we looked at the bearish pattern that was setting up in the gold and silver mining complex. We will look at how some of that has played out with the metals and what are the support levels that I'm looking at for the potential of the next bottom in the metals. So we start by once again looking at the price action of the paper price of gold. This is the spot price over the last 3 days. And we are seeing the weakness coming in today. And in the overnight hours, as we would call it here in the East Coast of the United States, this would be Thursday morning in Sydney and Hong Kong. We are seeing continued weakness in gold. This is basically the beginning of the weakness that I was expecting with the head and shoulders pattern in the gold mining sector from 2 weeks ago, the last video. So we saw a failure to break back above 1200. We will put that into better perspective in just a moment. And now the continued weakness here. Silver also showing weakness. It's actually holding up slightly better than gold on a relative percentage. We're not really going to look too much at silver for the rest of this video. But if you just go back and look at, for example, 2 weeks ago, the low that silver made, just above $16. So silver has not yet made a new low for this move, whereas gold, as we speak, is making a new low below 1170. So we're seeing some relative outperformance in silver, which tends to be a good signal for both metals over an intermediate term time frame. It doesn't mean that the low is in yet, but when silver is outperforming like this, it tells me that there is underlying demand for the metals complex. So looking at gold here, this is the 18-month view. For those who are new, these charts stay relatively similar for most of my videos, but we make changes as the important support and resistance levels change for gold. We are, of course, always looking at the spot price of the metal. The price that you pay for a gold eagle or any other physical product will always be higher, in the same way that the price of a refined cotton t-shirt with a design on it is much higher than the underlying price of just the bulk cotton. So the coins and the bars are a refined product, and that explains the premium. Of course, there can be a tightness in the physical market as well that can add to the premium. But we are here focused mostly on the spot price, which is called the paper price usually, and it is a whole lot of paper. But then again, this is the price that sets the underlying price for the physical as well. So it is important to look at both aspects of the market. And we were seeing that gold, in the wake of the Trump victory, here was the spike and the reversal on the Trump victory on the highest single volume in gold trading history. The most contracts traded in the paper market ever in one single day happened on that high. So that's telling you this high here around 1335 is going to take significant buying pressure to overcome. And you've just seen this real serious weakness here. The last support level that I have been watching is this 1173 level. You could see that bounce here. It lasted for a few days and is now breaking below that support level. So unfortunately, unless gold reverses immediately, And basically what I mean by that, in the overnight hours now in Asia, and finds a way to close over the next couple of days above 1200, which is this important broken support level. Unless that can happen here within the next couple of days, the next support level for gold is all the way back down at the 2015 lows. These support levels tend to be defined by areas of congestion like this. From February through June, you had this important congestion. There was a lot of buying and a lot of selling and a lot of buying and a lot of selling. And these buyers showed up multiple times at 1200, and then they simply failed to show up here about 2 weeks ago. So this is what accounts for the broken support here. After that support, there is not a whole lot of support for gold until the lows again. So this would be my projection. If gold fails to reverse higher, I think we are looking at a retest of the 2015 lows at a minimum. Now, what does that mean for gold going forward? Is gold completely broken? Should you sell all your gold and silver? Of course, that is an individual question. There's no one answer that's going to be right for every single person. It depends on a host of factors. But what does it mean for the overall commodity here if gold is going to retreat back to its lows here, which is looking increasingly likely at this point? Let's take an example. This is the last major bottom to form in the price of gold. And this was from 1999 through 2001. And the major shape, the major pattern that this bottom took is what you would call a double bottom, shown right here. And a double bottom means basically exactly what it sounds like. You have an initial bottom, and in this case in 1999, gold had fallen all the way down to $252. And you had a surge in September after the Washington Agreement, in which many central banks agreed that they would continue to respect the power of gold, at least as an asset to keep on their books. And you saw a 34% rise in the price of gold from 252 up to 337 in just a couple of weeks, basically exceeding the rise that we have seen here in 2016 for gold in percentage terms. And then what happened? After this spike, all of those gains were given back over the next 16 months. Until what? A double bottom, basically a few dollars higher than the 1999 bottom formed. And the double bottom being a retest of the initial bottom. You had a series of downtrend breaks. This is why I pay so much attention to these trend lines, horizontal support and resistance lines, all of these lines. Now, if you're telling me that the fact that the price hit 255 here in 2001 and 252 in 1999 is random, that these two levels are almost exactly even, and that there is no information to be gained from a study of the price chart, well, I'd say I'm sorry, I just don't agree with you. Because there is nothing random about this price action here. An initial surge higher and then a bleeding and a selling into the 2001 lows, after which there were no more sellers. And so you have this double bottom formation form here. And of course, after the double bottom, well, there was that double bottom. So anyone who sold in the preceding year or so missed out on the next 10 years of the bull market. Of course, it must have been very painful for those who bought right at the highs after that initial surge. But this is just to tell you we have to look at a bigger picture perspective. So the question now for gold is this bottom that formed in late 2015 going to represent another major double bottom forming, this time not at 250, but at 1050. We're now talking 15, 16 years later. There's been a lot of inflation, a lot of devaluation of currencies. So it is quite possible that another long-term bottom is getting ready to set up here in the gold market. And that those looking at this from just a short-term perspective are being a little bit too narrow in their focus for what could come. So, when the signals are mixed, as we have right now, I would tell you that one of the principles that really has helped me as an investor is to consider a mixed strategy. So what does this mean? You do not need to be all or nothing. You don't have to have 100% of your money in precious metals or zero. When we have mixed signals as we have right now, which indicates that the price of gold may be heading lower to retest that level, a mixed strategy can be very helpful. How do I implement that? That is by continuing to purchase physical metal, even while I scale back my positions in the gold and silver mining sector, which are leveraged. So I still hold a considerable amount of the physical metal, even though I think the price may be going lower here over the next 3 to 6 months. That is a mixed strategy. Why? Because it works. Beware of those selling fear. It is very easy to sell fear to individuals. And I won't name names here, but you all know if you've just started to follow the precious metals over the last year or two, there are a number of people that tell you to buy all you can right now, because if you don't, the price is going to some crazy number next month or next year. And if you followed this for long enough, you can see that is simply not happening. Will it happen one day? Yes, I believe the metals will be moving higher one day. But I do not believe that is going to happen this year or next year in a panic-driven mania. Let's get rid of the fear selling, ladies and gentlemen, and let's consider that success in the markets requires an unemotional and a flexible plan of action. This is the way that we can see clearly, that we can plan for various possibilities, and that we can seize those possibilities when they occur. Thank you very much for watching. It has been a pleasure to be with you again. The premium research that we produce here will identify the next bottom in gold, silver, GDX, and the individual miners. We will be including buy and sell signals with that. Will we identify it to the exact day? No, there is no need to do that. We will be scaling in over the course of the bottoms as they form, because that is the best recipe for long-term success. If you have an individual situation that you would like a researched, independent perspective on from someone who is not going to only tell you to buy, I do offer that service on a one-on-one basis. I thank you very much for watching again. The next update will be a week from today. Have a lovely evening, and I will see you then.